Welcome back to another episode of Rethink Real Estate. Today I'm joined by Zihao Wang, who is the head of his own family office. He speaks about being the second generation, being handed down some sort of assets, but at the same time, the business of going and acquiring multifamily properties. But this is the kicker here, and why I wanted to have him on Rethink Real Estate is in rent control marketplaces. For those that understand that, obviously this is going to be an interesting episode to you. And we have our own property management business where most of our properties are based out of LA. And it's one of the most difficult, I guess, atmospheres for any type of investor whatsoever. So it's one of those things where I believe that the country is definitely moving to more pro-tenant laws across the board, regardless of where you are, that we need to know how to live, develop, and acquire properties in rent control marketplaces and where the laws are so pro-tenant. I think we just need to get a little bit more used to that, and we need to understand it a little bit more and understand how to navigate it. Zihao gives us a little bit more of an insight to how they've done it over, a couple of generations and how he's taking it forward. Hopefully you enjoy the episode. Welcome to Rethink Real Estate. My name is Ben Brady, and this is a real estate podcast aimed to deliver sales strategies, marketing tips, and business insights from industry experts and myself to build a listing-focused business for the future. Let's get into it. Zihao, welcome to Rethink Real Estate.
Thank you so much for having me, Ben.
Zihao, I'm fascinated to talk to somebody that obviously is youthful like yourself and that has over, $500 million of assets that are under management at the moment. And, I guess that to really lead into most of our episodes, we ask the guests to sort of tell the listener, why should they hang around? What will they get out of listening to us today?
Well, I've been in the real estate industry for the past 8 years. So we're second generation, right? So my parents have been in it for twice as long as I have. And we've historically operated in one of the toughest markets to operate in the country, which is Southern California. And so we've dealt with a lot of the rent control and pro-tenant legislations that most people are too scared to touch or even think about in our industry. So I think, very happy and very looking forward to discussing how we navigate our assets and how we're able to make the most out of our time here in SoCal.
Well, again, I think I'm going to dive straight into it because I think that there's a part of this, because realtors being the predominant listener to this podcast, is that most people, I don't know if they understand how to talk about, investment in an area. I'll give you an example. We have a property management business. Predominant number of properties are in LA. And to be honest, is that if I'm looking at this, and again, this is going to be a great opportunity for you to hopefully convince me otherwise or give us some good tips and whatever it is. But I know from a landlord perspective, but also property management and us managing things, I don't think I'd ever buy an investment property in LA. Don't get me wrong, we own real estate in Orange County. Orange County is a very different beast to what LA is. And I think that when we speak to other areas across the country, I think that there's a lot of realtors that have suffered within the pro-tenant laws that are within their individual area that really stop investment. It's funny. We need more housing. People need more places to live, and affordability and all of those different things. But there is such a polar opposite thing that is happening in so many of the major cities, in the sense that they need the capital to go in there, but they're not making it easy for the capital to get any type of return whatsoever. Right. So I'd love to hear just a general philosophy around the LA side of things, or the rent control areas. Let's double click on LA and really focus on that, because I think that's probably one of the toughest in the country.
Yeah, so our strategies span across the entire, differently across SoCal, right? So in specific to hard rent controls, like cities like City of LA, like City of Pasadena, we typically only do either high vacant buildings or fully vacant buildings, right? Okay. And for us, that makes more sense because we don't have to go through, relocating tenants and deal with all, tenants when we get into the building. So for those, typically high vacant buildings, they're super, super distressed. We take on a lot of financial risk in terms of getting on a bridge debt, with no cover pretty much in the beginning. And then hopefully within a year cover to maybe 1.6 and then get a refinance at 1.3 cover. So we take more of the financial risks when we play in the tougher markets. With that said, we do have a focus onto other more secondary markets that are not rent controlled at the city level, but rent controlled at the state level.
Mm-hmm.
So cities like Downey, cities like Whittier, cities like Anaheim, Fullerton, Garden Grove. So more kind of towards the east side and maybe a little bit towards the south side as well, pushing more into Orange County and Inland Empire.
Right. Okay. So I guess that what is the for an area like, say, let's call it LA, and people can draw parallels to their own marketplaces. What do you see as the future for that marketplace from an investment perspective? Do you still see capital growth? Do you still, like, what is the appeal for you in LA at this point? Like, obviously, you guys buy based on opportunity. Like, it could be anywhere as long as it's the right deal structure for you or anything along those lines. You'll probably look at it, right?
Right. So we see LA, like if you take like the best pockets of LA, right? Maybe like Hollywood, right next to like Hollywood Boulevard. We really like those locations in terms of like them having decent rents and still being very central locations. It's so we like the market as a general. We just don't like the pro-tenant legislation that's on top of the market,
Right.
right? So we bought a building that's 64 units. It was fully vacant a while ago, next to the Magic Castle, actually in Hollywood.
Oh, yeah.
So beautiful location, super rundown building. It's been vacant for many, many years. The seller was super old. He didn't want to sell the building before because he didn't want to pay the broker fee. So super stingy seller as well. So we ended up paying the broker fee, getting the building, and then also basically turning the building fully around, right? From a rundown vacant property to now operating as a high cash flowing property that we've turned around, right?
So how do you procure your deals? How did you find that opportunity? What's the process that you guys put into play? Because I'm assuming there's like you would have to speak to thousands of people before you found the right type of deal structure, correct?
Yeah, it's our acquisition process is really tough, right? So like we talk to almost all the brokers in Southern California. We have some sort of connection with all of them, and then also we also like kind of work with the brokers, right? We don't just completely lean on the brokers to call us for every deal that they sell just because we have a lot of properties. I'm on LoopNet every single day. I'm on Craigslist every single day. I'm on CoStar every single day, trying to figure out basically almost bring deals to the broker so that they can negotiate a deal for me in
Right.
a sense, right? So
Right.
by being that active, I think it really helps us with our deal flow. But even with that, I would say our deal flow in the past 3 years has been relatively slow. 2024, we only did 5 deals in 2024.
Okay.
2023, 2022, we basically did zero because we just felt it was so risky. But going into 2025 and 2026, our target average usually in a year is between 8 to 10 deals. So we always try to increase our velocity by being as cooperative and as hardworking as brokers are in a sense.
So your view is that buy, hold, or is it to buy, revamp, and sell?
It depends. It also depends on the strategy.
Sure.
A lot of like, for example, vacant buildings, it might just be like a buy, flip, hold for like maybe a year and then sell, right? So it's a really quick turn, just because of the amount of capital that we infused in the beginning, right? And then there are other properties that are a little bit more stabilized, right? So a good example is a building we bought in July of 2024. In Downey, $20 million, 90 units. That one, we're getting in at a 5.5 cap. Good, like there's upside around 30% rental upside, but so still good upside, but not as bad as if it was like in LA with 100% upside.
Yep.
So for that one, we're preparing for a longer hold, right? That one we're maybe doing like AB 1482 rent increases every year, right? And slowly bring the rents up to market. And then as tenants move out, we remodel and renovate. So it's a much slower approach. For those, we typically hold for a little bit longer.
Right. Now, all of that to be said, I guess that what are the things that people typically don't understand when it comes to rent control within their marketplaces? Like, what are the things that you've had to really learn? What are the things that you have to keep eyes on? Because again, I understand that you're dealing with vacant buildings, or you want to deal with vacant buildings most of the time, but that's not always the case. So then there's a negotiation process to get people out. Also, then, all of those different things. So what do people miss when it comes to understanding the rent controls or the tenant restrictions as a landlord within a market?
I think the laws are very, very confusing, very, very muddled as well. And
Do you
there's
think
just a
that's by
lot of,
design? Do you think that's by design? Do you think they do that just to keep people like this shade of gray?
I do think so. It's kind of similar how like attorneys, when they write contracts, they try to keep it somewhat open ended, so there's negotiation and leeway to argue things, but then somewhat structured as well. So for example, a lot of like for example, city of Santa Ana in Orange
Mm,
County, right?
mm,
It's one of the only rent controlled cities, I think, outside of like Costa Mesa that's like rent controlled, right?
yep, yep.
For them, it's like, yeah, there's you only increase it like I think 3% or 60% of CPI, whichever one is lower. But they didn't. I don't think they set a restriction on substantial remodels, right? So there is a way you can move a tenant out because you're going to substantially renovate that unit or substantially renovate that property, right? So then there are other ways you can get around the apparent rent control, right? So they keep it kind of open-ended so that people might still be able to find leeway and to make money.
Mm.
But then that gets super confusing because it's impossible to underwrite, right? Because you can't underwrite the words on the law, right?
Yeah, correct. That's right. So another one that I heard of, and again, maybe I'm right, maybe I'm wrong here, but this may be in Southern California, but it may be another territory where we operate. Could be Florida, actually. It might not be Florida. It could be New York. Is that you are not allowed to remove a tenant unless you're moving back into the property. Have you seen that come through in any particular area?
Yeah, so it's one of the like ways that you can remove a tenant essentially, right? So for example, in Southern California, a lot of the cities, it's like if you're doing like an owner occupied unit, like you're gonna move into the unit, then you can potentially remove a tenant from their unit and then go into that unit. But I think you have to live in that unit for like 2 years or a certain period of time for that to actually count. And if you don't do that, then the tenant can come back and sue you and move back into the unit. So there's just a lot of different laws and regulations around what you can and what you can't do. And things change city by city. In fact, it's even more detailed than city by city. It's like zip code by zip code.
Right.
Because in SoCal, there's like, the unincorporated areas of LA County, and then there's the incorporated areas of LA County, and it's like two totally different sets of laws, right? So it's I think when navigating rent control, you really have to you really have to be local, and you really have to understand what you're dealing with and like which zip code you're in and what you can and can't do.
Yeah. Now, I guess that there's a part of this as well is that you can be as knowledgeable as possible and you can find the right deal. But if you don't have the amount of capital that's ready to go in order to make sure that you can strike on that deal at the right time, but then it's also the right capital at the right interest rates, everything like that it's so precise, really, is what you need to do in order to get the right type of deal. Now, obviously, you've got a family business in all of this, but outside capital is something that you've got to raise, I'm assuming. Is that right?
So we're a family office, right? So we're very well in terms of liquidity.
Hmm.
We actually run a fashion business. That's our operating business that
Right.
feeds into the family office. We typically can close on most deals just all cash ourselves, and then if
Right.
we want to do a recap afterwards to try to pull our liquidity out and syndicate some capital, we can also do that. So we're less strict on the financing side of things in terms of equity, but
Hmm.
I'd say you're definitely correct in that like so many pieces have to line up at the same time in order for a deal to really go through in this area, right?
Yeah.
And that's like definitely challenges I see all the time.
Well, I think that there's a part of that as well, is that it sounds like if you're a family office, is that the reality is you don't have to buy a deal in order to keep the capital working. It's one of those things that, I've seen many mistakes happen with these type of models is that people have got so much outside capital and none of their own really into it that they need to keep the capital working in order to make sure they have something to tell the investor. And they don't want to tell the investor that, hey, no, your capital's not working, but you're still paying me whatever management fee or whatever it is. And so therefore, in essence, the capital's losing money. So they go and just acquire deals and they try and work through the deal based on time in order to then have something to come out of the other side, which most of the time doesn't really work in that sense. And then also there's this other part of I think that there's an interesting part of what you're doing within difficult marketplaces. Like, for example, if you wanted to go and buy multifamily within Tennessee, go for it. Like there's so many people that are ultimately doing that. Virginia's another territory, Texas is another territory, Florida in certain parts of it is another territory where the investor side of things is so competitive because they are pro-landlord states or pro-landlord territories. I think there's something to be said about the niche that you can create within marketplaces where people typically wouldn't look. Are there any other places external to Southern California that you're aware of that are other good opportunities if you can navigate those rent control / pro-tenant laws?
Well, yeah, I mean, I think I've seen actually a lot of people make a lot of money in New York as well. New York is arguably worse than California, right?
Fair.
So like it's much worse than California in that regard. It's kind of super tenant friendly, right? They like do everything they can to help the tenants, and the rents kind of force them that way in a sense, right? But I would say a lot of my friends made a lot of money in New York because they knew what they were doing, right? So I have no idea what to do in New York,
Right.
but they knew what they were doing, and so they made a lot of money. So I would say like there is a possibility of making money in any market if you can find that method of doing so, right? Like we were talking about like Texas and the Carolinas and how they're difficult because of just the amount of competition from investors. But at the same time, I've seen a lot of people make a lot of money in Texas and the Carolinas and Tennessee and Virginia, right? So I think you just have to stick to what you know, stick to what you're good at, and try to grow from there.
Yeah. So let's say that we talk about the journey of what you've done so far, and let's say there's somebody listening to this that might not be generational real estate. They might want to just say, "Well, I want to be the one to hand it to my kids, and I want to be the one to give them an opportunity." How have you seen the infrastructure from your parents giving that to you, and you obviously taking charge of it as well? Like if you were going to give anyone some tips that was starting right now and wanted to be that starting generation to do so, what would you give them?
Well, I would say you have to be as honest to yourself as possible, right? Like I would say sit down and ask yourself, like realistically, how much liquidity you need, right? So like that obviously determines how much lockup capital you're going to have to put into this real estate and how long you're going to do that for. And then also like how active you're going to be in the real estate landscape, right? Like we're super active, group, right? So my parents started with the kind of house flipping kind of mentality, right? It wasn't like a buy and hold and leave it, set it forever. So they kind of taught me how to do almost like that flipping style as well. So that's what I was used to in the beginning as well. And so with that, kind of the properties that we bought are typically a little bit more distressed, a little bit more value add, taking on bridge debt and trying to really turn a property around. But for others, maybe that's not the case, right? Maybe they have a really good day job that they really like doing and want to spend majority of their time doing that, but they still want to kind of own real estate, right? From those perspectives, maybe it's buying a newer vintage building with less work and then more turning it into like a generational asset. And that also like, influences how you really pass on that asset, right? Like you can't just tell your kids that there's this asset and it's going to be yours in like X amount of years. I think the best way to do it is really to show them this asset, show them how to run this asset, why this asset is worth what it is. And at least that's how I got started, right? So I started with my parents showing me all of the different things with their assets. And I actually worked on the property management side of things for 2 years before moving more to acquisitions and capital markets. And so I know ins and outs of all of our assets. And so
understanding how to manage a property is invaluable.
Exactly.
I think that's invaluable in the sense that like people just think that you buy a property, you collect the rent, and away you go. There's so much to it in all different facets, regardless of whether it's multifamily or it's single family or whatever it is. It is something that you definitely need that knowledge and that skill set to understand then how to acquire good real estate. Also, I think that's such a great point, because it's funny how there's 99% of people that would do this from a basis of consistently. I think that they would see LA, or they would see New York, or they would see San Francisco, or they would see, Portland or Seattle or whatever it looks like, and they would go, absolutely not, I'm not even going to bother. Where you've sort of come through understanding that and seeing your parents do it along the way and the learning that they went through, and you've taken advantage of that opportunity within that market because it's so much greater than what some of these other competitive atmospheres are as well.
Yeah, well, I think it's largely because of how I got started, right? So I got started by being thrown into a rent controlled city, right?
Yeah.
So because of that, I'm very used to rent control. I hear about it all the time. I navigate it all the time. Maybe if I was I grew up in Texas, then the story will be completely different. Maybe I'll be talking about supply and demand instead of rent control. So it's how kind of I like the environment I was raised in, essentially.
So I've got a question for you about just rent control in general and the restrictive laws from a landlord perspective that there are from continued growth of it. Is that do you see the country as a whole? If you were to have a look at it at this point and you just said, take all of the United States and say that 50% of all of the states or 50% of all of the territories within those states is a very pro-tenant perspective versus the other 50% that might not be. What way? And again, that could be completely inaccurate. I have no idea what it is. But what direction do you think the country is going in? Are they going in more pro-tenant ways, or are they going more pro-landlord perspective? What direction, if you were to take the whole country, what direction do you think it's going in?
I think it depends on the administration in office as well. But I think so far, at least what I'm seeing is potentially more towards kind of pro-tenant, because of even in the red states like Texas, right? We're seeing more pushes for affordable housing, right?
Yep.
We're seeing government supporting affordable housing, and that's a sign of affordability issues, right? So with that, it's eventually you're going to get pushed to a position where there's very little things you can do,
Yeah.
because the cost to build it just keeps on going up. It will never kind of go down. Inflation always pushes price up. So from that perspective, I think eventually there has to be certain things that's done to solve the affordability issues that we have in this country, and kind of California and New York is probably the most established states, right? So they are at the forefront of affordability crisis, so they kind of enacted the rent control first and stuff. But I would say definitely more towards, I wouldn't say pro-tenant, it's just pro-affordability, I would say.
Pro-affordability, yeah, probably more politically correct way to put it. But I guess the nature of this is that for anybody looking to get started in this, or they currently started, and if they're just trying to pick the low-hanging fruit within some of the markets that are one of those areas that is, from affordability perspective, doesn't have rent control, they probably need to start looking into areas with rent control, because it's probably going to come in eventually if they are looking to long-term hold. But if you're looking to flip, it's probably going to be something that you've got to contest with eventually anyway.
Yeah, well, it depends on what long-term hold means to people, right? If it's like, if 10 years means long-term hold, maybe Texas is fine, right?
Yeah.
If 100 years means long-term hold, then maybe a lot of things will change. But at the same time, right, it's like maybe the affordability issue can be solved maybe with like modern technology, right? Like I'm seeing a lot of like modular buildings come up, right? Like
Okay.
California is really pushing for ADUs.
Yep.
Companies like Vantum is doing a lot of modular builds to try to lower costs. So maybe there are ways that we can solve the crisis without being too political.
Sure. Now, predictive wise, as we wrap up the episode, is that prediction wise, you and I are recording this at the beginning of 2025, and again, I don't like asking predictive questions, but the reason I am and I'm going to, as we move through our podcast for 2025, is because at this point I just have no idea what the marketplace is doing, and I'd like to think that I'm relatively connected across the entire country, but at the same point in time, people seem to think that now the election's over, the market's going to come back. It's going to help the inventory problems because of, I really do believe that there's been a recession over the last 6 months in perspective to volume of deals, not from a pricing perspective, but volume of deals is definitely one of the issues that all of the country faces. What does 2025 look like? If you were to sit back and look at 2025 at the end of the year, what do you think it's going to look like?
at least I'm hoping for a high mounting of distress, because that's kind of one of my strategies,
Sure.
is to sit on capital and wait for distress. But I don't know whether that day is going to come, right? Because like we've been talking about distress for the past 2 years now. It's a little bit different in that before it was always talking about like, delinquencies,
Yep.
unable to
Yep.
pay, the interest, that kind of distress. But now we might be going into unable to pay back the loan kind of distress. So it is a little different of distress. So I'm really hoping that distress would come. Whether that distress actually comes or not, I think it depends on a lot of things, like what the government is going to do, what Trump is going to do in his term, and also kind of how the economy is going to shape out. Right. I think it's not getting any easier on the financial side though, right? Like today, the 10-year just shot up, right? I think we had a really strong wage report. And so, people aren't seeing that rates come down as quickly as they're hoping for. The Fed signaled that already, I think, in the last meeting, that they weren't going to cut as aggressively in 2025, maybe only 2 cuts this entire year. And so from that perspective, I think the macro environment is still going to stay elevated in terms of rates. It's really how flexible lenders are going to be, and also how good operators can be at in keeping up with their NOI.
Well, again, we appreciate you being on the podcast and giving us your insights. And I think that this is one of the episodes where people can learn how to manage and also build net worth through real estate acquisition, and making sure that they understand that it doesn't come easy. It takes a village in order to do it, based on the volume of work that is needed in order to find that right deal. But thanks so much for joining us on Rethink Real Estate.
Of course. Thank you so much for having me, Ben.
So about 75% of our audience hasn't liked, followed, or subscribed to our podcast. It would mean the world to us, and it would help this podcast more than you know to expand our reach if you were to like, follow, or subscribe on any of the platforms that you're watching or listening on. Thanks again.